Today I'll present about Farm Fresh Berhad. Farm Fresh Berhad is a leading Malaysian dairy company that produces fresh milk, yogurt and other dairy products. The company operates using a vertical integrated business model, controlling farming, manufacturing and distribution, and is listed on Bursa Saham. During the COVID-19 pandemic from 2020 to 2021, Farm Fresh faced supply chain disruptions, lockdown challenges and workforce shortages. However, increased consumer awareness of health and nutrition lead to higher demand for fresh milk and dairy products. In response, the company improved operational efficiency, strengthened its logistic and distribution systems, implemented workplace health and safety measures, and adapted its operations to pandemic restrictions. In the post-pandemic period from 2022 to 2024, Farm Fresh expanded into new markets, improved its financial performance, adopted more technology, introduced product innovations, and focus on long-term growth. The purpose of this study is to analyze the financial impact of COVID-19 on Farm Fresh, examine operational challenges, evaluate the effectiveness of the company's response strategies, and provide recommendations to improve future business resilience. Next, I will explain the challenges faced by Farm Fresh during the COVID-19 pandemic. Firstly, the company faced financial challenges, including higher operating costs, rising raw material prices, and increased pressure on profit margins. Secondly, Farm Fresh experienced market challenges due to changes in consumer demand, reduced sales from the food service sector, and uncertainty in the market environment. Lastly, the company encountered operational challenges such as supply chain disruptions, transportation delays, and increased health and safety requirements to ensure business continuity and employee well-being. These challenges significantly affected the company's operations and financial performance during the pandemic period.
Next, I will present the financial ratio analysis of Farm Fresh Berhad, focusing on liquidity, profitability, and efficiency ratio from 2020 to 2024. First, for liquidity ratios, Farm Fresh experienced liquidity pressures during the COVID-19 period. This can be seen when the current ratio dropped to 0.79 times and the quick ratio fell to 0.38 times in 2021. However, the company recovered strongly in 2022, with the current ratio increasing to 3.61 times and the quick ratio rising to 2.80 times. This indicates a much stronger ability to meet short-term obligations after the pandemic. Next, for profitability ratios, Farm Fresh maintained a relatively stable gross profit margin between 23.77% and 28.72% throughout the 5-year period. In addition, the net profit margin reached its highest level of 15.65% in 2022. Although both ROA and ROE show a declining trend, the company remained profitable as it continued expanding its asset and equity base. Lastly, for efficiency ratio, inventory turnover declined during the pandemic years but improved from 2.76 times in 2023 to 3.80 times in 2024, reflecting better inventory management. Meanwhile, fixed asset turnover remains stable between 1.48 and 1.64 times, showing that Farm Fresh continued to utilize its long-term asset effectively. Overall, the ratio analysis shows that Farm Fresh achieved a strong post-pandemic recovery through improved liquidity, stable profitability, and better operational efficiency.
For my part, I will explain Farm Fresh Berhad's leverage and market ratio performance. Firstly, the debt ratio shows that Farm Fresh faced higher financial risk during COVID-19. In financial year 2021, the debt ratio reached the highest level at 61.27%, which means the company relied more on liabilities. However, it improved to 39.51% in financial year 2022, showing lower debt reliance after the pandemic. By financial year 2024, it increased again to 45.84%, so debt must be managed carefully during expansion. Next, The time interest earned ratio shows that Farm Fresh could still cover its finance costs. It was strong at 7.75 times in finance year 2021, but declined to 5.04 times in finance year 2024. This means the company is still able to pay interest, but its financial safety margin became narrower. For EPS, it was stable during COVID-19 from 2.15 cents to 2.22 cents. EPS then peaked at 4.87 cents in finance year 2022, showing strong post-COVID performance. In finance year 2024, it recovered to 3.40 cents but remained below the finance year 2022 peak. Overall, Farm Fresh recovered after COVID-19, but the recovery was not fully stable. Therefore, debt levels and finance costs should be controlled to protect long-term profitability and shareholder value.
I will explain Farm Fresh response to challenges caused by the COVID-19 pandemic. Firstly, Farm Fresh responded by expanding its production capacity and continuing strategic investment despite the uncertain economic environment. The company invested in dairy farm, processing facility and distribution network in both Malaysia and Australia. It also adopted new technologies and equipment to improve efficiency and product quality. As a result, Farm Fresh successfully increased its revenue from RM303.1 million in FY 2020 to RM810.4 million in FY 2024. Secondly, Farm Fresh strengthens its distribution and supply chain management. During the Movement Control Order (MCO), the company worked closely with retail, distributor, and logistic partner to ensure continuous product delivery. The company also improved transportation route and inventory management to reduce delay and wastages. This effort helped Farm Fresh maintain product availability and meet customer demand throughout the pandemic. Overall, Farm Fresh responded effectively to the pandemic by ensuring operational continuity, maintaining product supply, and continuing business expansion despite challenging conditions.
I will explain the strategy implemented by Farm Fresh to achieve a long-term business growth. One of the key strategies adopted by the company was product diversification and market expansion. Farm Fresh expanded its product range by introducing flavored milk, yogurt, plant-based beverages, and other value-add products to meet changing consumer preference. At the same time, the company expanded its market reach through wider distribution channel and increased the penetration into both domestic and international market. This strategy strengthened the company brand image and contribute to higher sales and revenue growth. Another important strategy was strengthening its financial position through its listing on Bursa Malaysia in March 2022. The initial public offering enabled Farm Fresh to raise substantial capital for expansion projects, operational improvement, and debt reduction. As a result, the company debt ratio decreased significantly, while total equity increased, providing greater financial flexibility and supporting a future growth opportunity. In conclusion, Farm Fresh strategy focused not only on overcoming the challenge of the pandemic but also on building a stronger foundation for sustainable growth through diversification, market expansion, and financial strengthening. The company successfully achieved its competitiveness and long-term performance.
Farm Fresh should focus on improving productivity and profitability through better use of resources. Cost control is important to maintain profit margin despite rising operational expenses. The company should also expand its product portfolio to meet changing consumer demand and generate higher profits. In addition, maintaining a healthy balance between debt and equity will support future growth while reducing financial risks. Strengthening to supply chain and adopting technology will further improving efficiency and consumer satisfaction. In conclusion, Farm Fresh demonstrates strong growth despite challenges such as higher operating costs, supply chain disruption, and labor shortage. during the pandemic. The company successfully expanded its productivity capacity, diverse product, and strengthened its financial positions. As a result, revenue and assets increased substantially over the 5-year period.